A $4,000 landscaping project may look better than a $600 maintenance visit. But after extra crew hours, materials, disposal, equipment, travel, and a callback, the smaller job may have produced more useful profit per crew hour. Revenue tells you how big the invoice was. It does not tell you which work strengthens the business. In this video, we'll build a complete cost list, calculate contribution dollars and contribution per crew hour, and use AI to compare job types without inventing numbers. Then, we'll turn the findings into better questions for pricing, scheduling, and job selection. Subscribe to AI Work Crew and turn on notifications for practical new AI content coming out daily to help local service businesses save time, work smarter, and grow. Choose one completed job with records you can verify. Capture the actual customer revenue before sales tax, discounts, or refunds according to how your accountant tracks it. Then record field labor hours for every crew member, including setup and cleanup. Add the payroll cost or approved labor cost method your business uses. Include materials, plants, soil, mulch, chemicals, subcontractors, equipment rental, dump fees, and other direct purchases. Do not ask AI to estimate missing costs. Unknown numbers stay unknown until you find the record or deliberately choose an approved assumption and label it. Now include the time that invoices often hide: loading supply stops, drive time, unloading disposal runs, and return visits. Decide consistently whether estimating and administrative time belongs in your job level review or in overhead. There's more than one valid accounting method, but changing the method from job to job creates a misleading comparison. Also decide how you will account for fuel, owned equipment, insurance, shop costs, office payroll, and other overhead. For formal financial decisions, use the method approved by your bookkeeper or accountant. The goal here is a reliable management view, not a replacement for financial statements or tax advice. Start with three numbers. Direct contribution equals job revenue minus the verified direct job costs you chose. Contribution margin percentage equals contribution divided by revenue multiplied by 100. Contribution per crew hour equals contribution divided by total crew hours. For example, imagine a cleanup produced $2,000 in revenue. Verified direct costs were $400 in materials and disposal, plus $900 in labor and other included costs. The direct contribution is $700. If the crew used 20 total crew hours, that is $35 of contribution per crew hour. Those numbers do not automatically mean the job was good or bad. They create a consistent basis for comparison. Create one row per completed job with the same fields: date, service type, zone, revenue, total crew hours, direct labor cost, materials, subcontractors, rental, disposal, travel or equipment cost, if included, callbacks and notes about unusual conditions. Remove customer names and unnecessary private details. Then give AI the field definitions and your approved formulas. Ask it to check for blanks, inconsistent categories, impossible values, and unusual outliers before calculating anything. A polished analysis of dirty records is still a bad analysis. Use this structure. Analyze only the verified job rows below. Do not invent missing values. Apply the formulas exactly as provided. First list data quality problems. Then calculate contribution dollars, margin percentage, and contribution per crew hour for complete rows. Group comparable jobs by service type and zone. Show the median as well as the average when enough rows exist. Identify patterns as questions for owner review, not conclusions. Explain which additional facts would confirm or reject each pattern. Why ask for medians? One unusually large or troubled project can distort an average. And why call patterns questions? Because a low result might come from poor estimating, crew training, equipment failure, weather, travel, bad records, or a service that truly underperforms. AI cannot know the cause from one number. Suppose 10 cleanup jobs show strong invoice totals, but weak contribution per crew hour. The model also notices that the weakest jobs had long disposal runs and more debris than the estimate recorded. Do not immediately raise every price or stop offering cleanups. Review the original estimates. Were debris volume and haul distance captured? Did the quote include an approved disposal allowance? Were crew hours recorded correctly? Could jobs be scheduled closer to the disposal site? Should the intake process require better photos or an inspection threshold? Those are useful operational questions created from verified history. By contrast, if recurring mowing in one dense zone shows steady contribution per hour and low callbacks that may support adding nearby customers, but capacity, service quality, and customer fit still matter. Once a month, review 4 lists: job types worth investigating, jobs with missing records, repeat causes of lost time, and opportunities to test. Choose one small experiment. Maybe you add a debris volume field to estimates, create a separate disposal line, require a site visit above a defined scope, or group a service by zone. Record the change, the start date, and the measure you expect to improve. Compare a reasonable set of future jobs using the same accounting method. Do not chase 1 week of noisy data or let AI change pricing automatically. Your job profit review now has verified costs, complete crew time, consistent formulas, clean comparison rows, and a human decision step. It will not hand you a magic price. It will show where better questions can protect the hours your crew works. The next leak may happen between jobs. Even profitable work loses value when trucks cross the same town all day. In Episode 3, we'll build a more profitable lawn care route using zones, service constraints, travel gaps, and human-approved scheduling.